Hello and welcome to this October 22nd, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at the RTH, the retail holders. This is an ETF that tracks the retail group. The RTH is comprised of, I believe, 20 retail companies, and about half of the RTH is actually based on just 4 companies: Home Depot, Walmart, Target, and Amazon. So those 4 companies actually represent about 50% of the RTH. And what's interesting is that all 4 of those companies have some rather suspicious technicals in terms of divergences. Stocks have either broken out or have attempted to break out recently with MACDs that are lower. And take a look at the RTH. I mean, it's kind of following suit. On Thursday, you can see we broke out intraday. It turned out to be a false breakout. We needed a close over 100.13, and we came back down. We closed at 99.93, so we had a false breakout. You can see the long tail above that resistance area. Didn't make it, came back down, closed beneath. It was on increasing volume. We tried to make this push up on increasing volume to establish a breakout, and we failed. Now with that, you can see the MACD here is pointing straight back down. So even though prices were trying to make that breakout to the upside, the MACD has actually been turning down throughout most of, actually all of October. So technically this one's not looking particularly good. If you're on the bullish side, you want to see consumer discretionary continue to push higher. Really need this retail group to take out the 100.13 level. So if you wanted to short the RTH, this isn't a bad area to do it with a negative divergence and a false breakout. You could consider covering on one of 2 areas, either on a close above 100.13, or you could, if you wanted to keep an intraday stop in play, take a look at the high from Thursday, which is 100.80, and use that as an intraday stop. The RSI and Stochastics both pointing down. Stochastics have actually fallen below 50, even though we had a potential breakout. It's kind of unusual to see the Stochastics that low with a potential breakout. The RSI, which had been up near 80 in September, has fallen, is now back down around 64 or so, again with a possible breakout in play. So you've got the MACD pointing down, you've got RSI not really following suit, Stochastics weak, and all at the same time the RTH tried to make a breakout and didn't quite make it. So this one looks to me like it's a little weak, and I would expect that if we don't get that closing move above 100.13, that we're going to see some weakness on the RTH, possibly all the way back down to the 50-day moving average, which right now is at 94.27 and rising. That's what I would look for. Your first area of price support is going to be right around the 97.95 to about 98 area. So we've got a couple dollars to the downside before major support, or at least major short-term support, comes into play. You've also got a 20-day moving average at 98.31. So if you go much below the 98 level, you're losing price support and the 20-day, and that's not really going to leave you a whole lot of support until you get down to the 50-day moving average. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.